Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.Exchange. What a short covering rally. Today morning, I was about to take a pessimistic view because the first 3 days of the new year market falling, the likelihood that, the markets may continue to underperforming for the rest of the year. That is what exactly happened in 2011. But this year, although on a closing basis, the first candle was red, but weighted average closing, the first candle was green. So it was only 2 days of fall. But today, as I told you, 21,500 and Nifty took support exactly at 21,500 yesterday. Everyday markets making bigger moves, and everyday Bank Nifty moves more than 500 point. Last 2 days it fell 1,000 point and today shot up 500 point. So now again, there are many surprises today, and Indian markets are always surprises. Number one, yesterday FIIs and DIIs were both net sellers. So generally people expected a bearish sign today. The second thing, yesterday in US markets and December 20 low was broken, both Nasdaq 100 as well as S&P 500. And Nasdaq 100 not only broke December 20 low, it closed below that. And S&P 500, after breaking the low, recovered a little bit, not much. But despite that, today we opened a very huge gap up. And in fact, Asian markets were also negative. European futures and US futures were flat with a slightly positive bias. But we gap up nearly 100 point up. And not only that, that gap up continued to sustain throughout the day. There was not even a small sell-off. Only I think around 3 p.m. there was some sell-off about 30 points in Nifty, 35 points fell. Then from there another 60-70 points shot up. I think the Bank Nifty has shot up even more than that in the last half an hour. And in fact, last half an hour there was a huge selling yesterday and day before yesterday, and today there was a huge buying. So that shows that what has happened today is just a short covering rally. I don't think that anybody, would have bought today, and the shorts were covered. Shorts were running for cover. And even the last 2 days, though markets fell, I've been keep telling you, though when the markets are falling, the India VIX was also falling. So that means, the markets are likely to stabilize and not likely to continue to fall. Of course, technically I told you 21,500 is a very, very good support. And yesterday 21,500 exactly touched and reversed about 20 points only yesterday. And I also told you, in a normal bull market, the third day low is considered to be very, very important. If yesterday's low would have been broken, I told you I would be changing my bullish view. But that has not happened. Not only that, the markets are recovered very, very significantly. We are completely going against the global trend. Then we thought probably institutions are pumping in the money, but at the end of the day, institutional money was just only about 100 crore. FIIs were buyers for 1,500 crore, domestic institutions were sellers for 1,400 crore. So net institutional figure is only about 100 crore. So Indian market, it is not because of FII, not because of DII, only because of F&O players. And they decide. Once there's a small problem, they keep on shorting, market keep on falling. Once there's a small trigger for short covering, people keep on covering their shorts and market keep on moving higher. Otherwise, what 100 crore can do to our market? And look at the realty index. Realty index is up nearly 7% today. So I do not know what is the news, that 7% in index moving in one day, not a stock, an index. So that's really very, very huge. So we are back to normal, and 21,500 to 22,000 is what I told you, and it went very close to 21,500. Now recovered, now come back to somewhere in the middle. But today the VIX has crashed more than 5%, and option premiums, the put option premiums crashed, but call option premiums, it did not go up much. So probably this year, option sellers, they had a tough time in last year, but I think this month it's doing very well. I think whoever sold options, they've been making good money. So because the VIX is coming down, option premiums are also falling. Even the long-term options had abnormal moves in the month of November and December. Now the sanity is returning to that. So, I'm having a conference in Dubai. I'll be sharing 1 or 2 strategies. I have some ultra low risk strategy with almost nil. Today, in fact, one of my friends asked me for a strategy today. I told him a strategy where he will be making some profit as long as Nifty is trading between 0 to 26,250. So Nifty trading from 0 to 26,250, he will make some profits, and he is likely to make more profit if the markets go higher. Market, even if it goes to 0, Nifty goes to 0 also, he has nothing to lose. So I have developed some strategies like this. The first time I'm going to share this in the Dubai conference. Later, if possible, I will be doing a webinar for a small fee. Okay, they're all like really very, very interesting. And I have also developed some strategy. With zero risk, a person can get about 20% return per annum. But only thing is the liquidity. So because I deal mostly with the long-term options, the liquidity is an issue. So anyway, already there are so many complaints. Mr. Sundar keep on talking about his workshop and conferences in post-market rather than giving the content. So what to do? I don't have a content, so that's why I have to speak all these things. So this time, okay, markets behaved exactly as per the pattern analysis. So this is called pattern analysis. So I told you, right, third day low is very important, and those kind of things. So thank God today market moved higher. So I'm still maintaining my bullish view. So now what next? Okay, number one, global markets are still struggling. There is no sign of revival. Okay, number two, what happened today is just a pure short covering, nothing else, because there is no significant institutional money. Even if some money has come, that would have gone to mid cap and small cap indices, not the large cap. Even now, today also, mid caps and small caps are doing extremely well compared to large cap. So Nifty has to cross 21,770. So that is my technical level. If that is crossed, then only I become bullish, and the uptrend may resume. So until then, what is happening? Shorting and short covering. So I don't think that any meaningful amount of money is flowing even from the FII desk in this year, right? So probably they are waiting for these corporate results, and next Thursday both TCS and Infosys coming out with results. So maybe they may pump in more money after that. Probably they're waiting for the corporate results. And even today also, Infosys went up by short covering, but all the remaining IT stocks, TCS, Wipro, HCLTech, they're all down only today. So IT index, I think that's going to be a pain point. Unless, also, generally when the Nasdaq is not doing well, IT stocks will not do well. So of course, there is no 1:1 correlation, but as I told you, the pattern analysis, that's how it works. Okay. So we need to see what's going to happen tomorrow, but key level to watch is 21,770. So until then, 21,500 and below put options is doing extremely well. Yeah. So that's it for now. Hope you enjoyed watching this video. Thank you for watching.